it's the obvious question. We kind of have to begin there. How is it that after 18 years, GoDaddy isn't making money on a net income basis? Let's forget about cash flow. Why no net income?
Look, SaaS-based businesses are not new to the floor of the NYSE. SaaS-based businesses have been around a long time, and the reason we pay so much attention to cash flow and run the business on cash is because on a GAAP recognition basis, you pay for everything up front and you actually recognize revenue ratably over the year. And so it ends up creating a gap, no pun intended, between the way you bring cash in and the way you report it. So we run on a cash flow basis. Frankly, investors understand a SaaS-based business and cash flow management. And our conversion to cash from EBITDA to cash is very strong, even with that gap difference in income.
Can you help us understand, GoDaddy is a brand, as a company, so many people know who you are, but they don't understand what you do. And when I look at your branding strategy and the advertisements that you've put out, they seem totally disconnected from the company. So can you help us understand it?
Yeah, sure. So I would say that, if you went back a decade, the first ads that GoDaddy ran, and our founder, Bob Parsons, a brilliant marketer, actually wanted to get a lot of attention for domain names, and very few people even knew what a domain name was. So Bob had a method of getting people's attention. It was more of a shock and awe approach to creating attention and awareness, and brand awareness absolutely surged. The business surged. Bob grew that business to $1 billion in revenue on that attention. Now, folks, as you said, know the GoDaddy name. We have 81% brand recognition today. And over the last 2 years, we took a very, very big turn in our advertising strategy and how we portrayed both the company and our customers. The last 2 years, we've had very different advertising where we have shown small businesses in their environment fighting the good fight, trying to make sure that they can run a business by themselves. And that's what GoDaddy does. We help somebody take their idea online and run their business as a digital entity. And that's our business. The dollars that we make in our business are because small business customers pay us to get them online and to give them a web presence that makes them look bigger than life or bigger than their business can be. And frankly, these people don't necessarily want to make a ton of cash. They might just want Fridays off, or they just want to work for themselves so they have more freedom. And that is what we do as a company.
Blake, anybody buying your stock today, and for the future for that matter, needs to understand your business. They also need to understand the finer points of your corporate structure, which, quite honestly, is a little bit complex for a public company. I had to spin through your S1, and I found something that I need to ask you about. It has to do with tax distributions and what's going to your private equity owners, Silver Lake and KKR, and what's going to the new common equity holders. It says Desert Newco, which is the operating subsidiary of GoDaddy, will be required to make tax distributions that will likely exceed the actual tax liability incurred by many of the existing owners. And I could continue, and we're going to show everybody the text on screen here. But what it seems to me is going on is that common equity holders are disproportionately bearing the tax liability on behalf of the private equity legacy owners. Is that the case?
No, I mean, I tell you, it's a pretty complex thing, and I'll try to make it as simple as possible. Bob Parsons, we have an Up-C structure, and an Up-C structure is a very typical way. It's been done 60, 70 times over the course of the last few years, where an Up-C structure is how you take an LLC into the marketplace. So Bob never took a dime of outside cash and ran the business as an LLC, and when he sold 3/4 of the business to private equity, he maintained that LLC structure. Right. So when you convert an LLC to a public company, you do an Up-C. There is a tax distribution methodology that effectively pays it becomes a different way of paying taxes, which actually limits tax liability for the company as distributions are made to those partners and they bear it.